Good morning. It's Sunday morning. It's 7:22 a.m. Pacific Standard Time. The date 10/13/2013. What do we have? We have the Dow Jones Industrial Average. We said that there would be a major pullback, not correction. I'm sorry. It was a pullback and another one. That was the first one we had in August. We came back. We tested the 200-day simple moving average at 14.7. Now, let me just say something that's very important to the MMTs and the people around the world who follow us is that we made a lower low in the Dow from the August one slightly. We had a huge price volatility to the upside right up here. I will say that in the short term that we went about 400 and some points in this Dow. On the weekly chart, we had broken all the 10-week and 20-week, and out of the key indexes, the Dow was the worst one technically. Earnings season starts tomorrow morning on 10/14. There will be a lot of volatility. The debt ceiling, the government shutdown, and all of the rhetoric in Washington, D.C. is playing their hand out right now as we speak. And they have had recess on Saturday, Friday evening, and today they're supposed to get together again, but they still remain in a stalemate. We all know that 1 year ago, before this big bull rally started, we were having the same rhetoric at that time. And then at the last minute of the last hour of the day, there was a great resolution. What I will tell people in the Dow is that we had the pullback. Every bull run has pullbacks. We've had 3 of them. It started here when we called this one at the top. It's on the stockmarketfunding.com website. We haven't missed one reversal. When things get overbought, they need to be sold. Then we rally up, we make another all-time high, and in August, as we said clearly, there would be another pullback, and there was. We rallied up, made another all-time high slightly right up here, and there was going to be a big pullback. Not a correction. A correction needs to be at least 10% or better now. These are just pullbacks, but you made a lower low in the Dow, period. And it's regained the 10 and the 20-week moving average. When the government finally does say that the government isn't going to be shut down, which it never, the government shutdown and the debt ceiling, they're 2 different things. So the government is going to open back up. That's a forgiven. The debt ceiling and not paying the bill, that was never going to happen. Never. They pull in $35 billion a month. I mean, their interest rate is about $35 billion a month. They're pulling in well over $200 billion a month on tax profits that they pull in from U.S. citizens. They were never going to default, and they're not going to default now. I will say one thing for sure, that the earnings season that you're going to go into right now is going to tell it all. The quarter is going to be soft. Some are going to be okay, but a lot of them aren't. The guidances are going to be the key in corporate profits moving forward at the end of the day. It's time that you lighten up and get smart. Learn how to trade the volatility, because volatility is in your favor. The Dow was the most technically damaged chart. We have yet, and that was well over, it was close to 1,000 points. 15.7 to slightly right above 14.7. The monthly chart, which we'll talk about, is for the 10-month moving average at 14,803. That's a monthly moving average. Got tested. It's come back up. The wall of resistance will be at 15,400. Period. End of story. The daily format, as we can clearly see, 15,400 right here is where the breakdown was. 15,400 right in here is where the breakdown was in the Dow. Period. End of story. That's the upper end of the wall of short-term resistance. All daily moving averages, from a daily moving average perspective, the 200-day got tested. That's good, and it bounced. But it was headline driven, it was volatility driven without any resolution. Short term, because we ran too far too fast, is that when the government does make their announcement, because we've already rallied in anticipation, it will be sell the news, sell the rumor, sell the news, sell into the volatility. Year-end profit taking, we've had some year-end profit taking that occurred at 15.7, all the way down almost 1,000 points pullback. Nice pullback. And what I can say is beware that the volatility will increase. If there is no resolution come tomorrow morning on 10/14, you will see volatility get extremely high. And one of the things that you must be aware of is that when we come up into the 15,300 area, where this trend line is across here, that's where the daily moving averages are going to be tested. We're slightly above the 10-day simple moving average at 15,040 right here. That's the psychological number for the Dow, 15,000. What went up in anticipation can go right back down in price volatility very quickly, and corporate profits start on 10/14, and individual companies are going to give their guidances. They're going to talk about what the 2014 looks like. The thing that is lagging to the upside was the volume, was anemic. Low volume is not good. On when you have pullbacks, you want to see where that volume is extremely 3-to-1 higher than the selling volume. That means that the downside volume versus the upside volume, that the downside volume was much greater than the 2-day rally up. And we close at 15,237 right here. This is where we're at. And that the upside volume is not there. That's the end of the story. That's the technical side of it. And that's what investors and traders and institutional people are going to have to deal with now.